Picture this. The non-farm payrolls report drops, and the numbers shake the market. CPI data comes in red hot, way above expectations. The Fed chair steps up, drops a cryptic hint about rate hikes, and suddenly, analysts are scrambling. The market holds its breath, then chaos erupts. Screens flash red and green, candlesticks spike and collapse like a heartbeat in overdrive, and traders everywhere lunge at their keyboards, frantically clicking buy or sell. It's pandemonium. Prices explode 1 second, crash the next. Spreads widen like sinkholes. Your adrenaline spikes, your hands get clammy, your heart pounds. You think you're seizing an opportunity, but in reality, you're stepping into a trap. Because news trading isn't about split-second bets or knee-jerk reactions. It's not some slot machine where you pull the lever and hope for a payout. It's a ruthless chess match, played on a board made of economies, geopolitical shifts, and human psychology. News events lure traders in with the promise of insane price swings, fast moves, fast money. But beneath that shiny bait, they're riddled with landmines designed to wipe out the unprepared. Those volatility spikes, they're often just mirages, baiting rookies into whipsaws that shred accounts to dust. Sure, a single headline can send a currency pair flying hundreds of pips in minutes, turning a modest account into a fortune, or reducing it to zero just as fast. That's the double-edged sword. High reward, but also high risk. It's a tightrope walk over a canyon where one wrong move sends you plummeting into the abyss. So why do some traders walk away with profits while most end up broke? It's not about having the fastest Wi-Fi or the flashiest trading rig. It's about preparation, hours of it, combined with unshakable discipline and a deep understanding of macroeconomics. Because the market doesn't reward the fastest finger, it rewards the smartest mind. I'm Alfred Mugo, and today we're cracking open the vault to expose the biggest Forex lies, the traps hidden in news trading, and the real strategies pros use to cash in while the rest crash out. And yes, the voice you're hearing is AI. I'm experimenting with tech to enhance the way I bring you real trading wisdom. This isn't theory. This is battle-tested knowledge, sharpened by real trades, real losses, and real breakthroughs. If you're ready to turn market chaos into cold, hard opportunity, smash that subscribe button, buckle up, and let's dive into the deep end. Why 90% fail at news trading. News events are like glittering treasures booby-trapped with dynamite. They look like easy money, but they're designed to blow up the reckless. They lure in traders with the promise of huge profits, but what they really offer is a battlefield. And in that battlefield, 90% of traders get slaughtered. Need proof? Let's rewind to the 2023 Fed rate decision. The USD soared, then collapsed, then ripped higher again, all within 15 minutes. Traders who jumped in on the first move, they got obliterated when the reversal hit. The ones who tried to sell the dip, they got steamrolled when the price shot back up. It was a bloodbath. Accounts got wrecked. Dreams got crushed. And the worst part? Most of these traders never even understood what went wrong. The few who walked away with profits, they weren't chasing headlines. They were decoding the bigger picture. Inflation was climbing too fast. Labor data was tweaked in the fine print. The Fed's tone signaled tighter policy, despite the noise. They knew that a rate hike doesn't always mean buy the dollar. Sometimes it signals economic desperation, not strength. They weren't reacting to a moment. They were reading the story. Most traders lose because they keep falling into the same deadly traps. Let's dissect the 3 biggest mistakes that destroy 90% of news traders. Daughter 1, chasing volatility. Jumping into a trade just because prices are flying up and down? Rookie mistake. Volatility tricks traders into thinking there's momentum when in reality, it's just market noise. What looks like a breakout can flip into a fake out in seconds. Take 22. The ECB hiked rates by 50 basis points and your USD skyrocketed. Traders piled in, thinking it was a one-way trip up. Then, boom, the price collapsed 150 pips, wiping them out. Why? Because that first spike wasn't a real move. It was reflexive, not sustainable. Volatility isn't a strategy. It's a trap. Chase it blindly and you're just gambling with your account balance. 2. Ignoring revisions. Economic data isn't set in stone. It gets revised, tweaked, and manipulated all the time. Take the 2021 U.S. non-farm payrolls report. The headlines scream 900,000 jobs added. USD bulls rushed in. Then a week later, the revision slashed it down to 400,000. The dollar crumbled, and those same traders got annihilated. The lesson? Headlines lie. Pros don't just trade the number, they dig deeper. How often are past figures revised? Was this data point an anomaly or part of a trend? Did last month's number get a sneaky adjustment that no one noticed? If you're trading off first impressions, you're trading blind, and the market has zero mercy for the blind. 3. Overleveraging. A 100 pip move looks like easy money until it turns into a wrecking ball that wipes out your entire account. During news events, spreads explode, slippage gets brutal, and stop losses get hunted by ruthless algorithms. Picture this. A trader is using 51 leverage on a calm day. Everything seems fine. But then a Bank of England rate decision drops and GBP/USD rockets 200 pips in seconds. That leverage? Instant margin call. The pros? They dial back risk during news. They'd rather miss a jackpot than get wiped out. Because in trading, survival beats greed every time. The global economy is your playbook. News trading isn't about reacting to headlines. It's about decoding the forces behind them. The real trade isn't in the bold print of a report. It's in the hidden layers of economic reality that most traders never see. Every major market move has a backstory. Why is inflation rising? Supply chain issues, wage growth, geopolitical tension. Why did the central bank hike rates? To fight inflation or to prevent capital flight? Why did that bad jobs report still send the stock market higher? Because rate cuts are now on the table? Headlines are bait. The real money is in reading between the lines. The scammer's hidden agenda. Beneath the glitz of Forex news trading lies a darker truth. Scammers thrive in this chaos, exploiting the unprepared with a calculated agenda that's as old as greed itself. They don't just stumble into profits. They engineer traps, weaving a web of deception that targets the hopeful and the desperate with surgical precision. These predators peddle guaranteed strategies, promising to turn news events into gold mines, but their real goal is to drain your account while they vanish into the shadows, leaving you with nothing but regret. Their playbook is slick. They flood social media with fake testimonials, Photoshop profit screenshots, and urgent calls to act now or miss out, creating a frenzy that drowns out reason. They charge steep fees for exclusive signals, only to deliver vague tips that crumble under scrutiny, ensuring you lose while they cash in. And when the inevitable wipeout hits, they blame you. You didn't follow the plan, shifting the guilt to keep their hands clean. This hidden agenda isn't random. It's a business model built on your losses, a machine that churns profit from the dreams it crushes. Recognizing this scam is the first step to breaking free. Knowledge is your shield against their knives. Turning knowledge into power. Armed with the truth about news trading, you can transform yourself from prey into predator, using knowledge as your weapon to conquer the market's chaos. It's not enough to spot the traps. You must wield understanding to outmaneuver them, turning every data release into a chance to profit rather than a risk to avoid. Start by building a foundation. Study central bank policies, track economic indicators, and map historical reactions to events like rate decisions or GDP prints, building a mental library that guides your moves. Practice is your forge. Simulate trades on demo accounts during news events, testing your strategies against real volatility without risking a cent, refining your edge with each dry run. Then, when you step into live markets, scale in slowly, micro lots at first, letting your confidence grow with your account, not the other way around. This power comes from discipline, not luck. It's the result of hours spent learning, analyzing, and adapting, turning raw data into a roadmap to success. With this approach, you don't just survive news trading, you dominate it, rewriting the script where others fail. Bottom line? Most traders lose because they think news trading is about speed, a race to click faster than the next guy, a frantic dash to outpace the crowd. It's not. It's about understanding the game better than everyone else, seeing the moves before they happen, reading the market like a book while others skim the cover. Want to stop getting fooled? Trade the story, not the headline. Dig into the why, not just the what. Master risk, or risk losing everything. Keep leverage in check, respect stop losses, and never bet the farm on a single move. Look beyond the obvious, because the pros already are. peering into the shadows where the real opportunities hide. Smash that like button if you just leveled up your trading mindset, if you feel that spark of clarity igniting inside you. And if you're ready to start winning where others fail, you know what to do. Hit subscribe and join the fight. Welcome to the next level. Let's get it.